All right, Matty, welcome back to the Ask Matty Show. Matty, how are you doing?
Hey, I'm doing great. Grateful to be here another day, another dollar. Ready to do some questions here for you guys related to crypto and hopefully get you guys a little more educated.
Matty, I was just talking with our good friend Dan Habib, and we were on the Crypto Charge Live Show team. So if you don't want to miss out on those shows, the daily shows talking about macro, talking about crypto, definitely become a Crypto Charge member. But I was talking with him about, was this correction in Bitcoin enough? And I want to bring that to you, Matty. Was this correction in Bitcoin enough? We saw Bitcoin come down a little bit, which was what your prediction is before continuing higher. Was this correction enough for Bitcoin to now go its way up to the moon?
I would personally feel more confident if Bitcoin decided to take a bigger step down. Now, obviously, that's not great for any of us investors seeing Bitcoin, descend another, let's say, $10,000 from current market price. But there is major imbalances at lower prices, and I always keep those areas of interest in the back of my mind when I'm doing chart work here. And of course, we can always see a more shallow pullback like we saw in the last set of corrections where we saw, a little over 20% and kind of sideways action with a little sweep of the lows and then a move higher. We are technically making a structure that looks similar to that. However, we could also be making some sort of distributive top right now. Now, when people hear you say things like distributive top, they say, oh my God, that means you're calling for the market cycle top. Stop. Hold your horses, put them back in the stable. Kentucky Derby's over. When I talk about distribution, I'm talking about a phase in which we see a topping structure, a phase of markdown, and then reaccumulation at a higher low. So if Bitcoin were really to do the healthy thing right now, we'd probably revisit the low 50s. Now, that might not happen until a later part in the cycle, and people are going to get very disappointed in the bear market if we do have to come back to those areas, especially, let's say, if we get to a 250K Bitcoin and then you see a correction back down to the low 50s. Again, just resatiating that zone, making a significant higher low, but it's going to always throw people for a loop. So the longer we leave these imbalances unchecked, those are areas that are still areas of concern for me in the future. So have we corrected enough? So far in the cycle, we have seen, minus 20, minus 25, and that's more than enough for Bitcoin. Structurally, we're still kind of within a compression structure. It could move higher. But ideally, I'd like to see a deeper correction in Bitcoin to say, yes, that is the higher low, bullish, 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 up and away we go.
I like that, Matty. That's some good insight there, and I think you and Dan agree heavily on this. And I'm very excited. I really want these corrections, and people really need to get acclimated to that terminology. Like, we want to see these pullbacks. We want to see these opportunities to be able to throw more money into the market so that we're not, if we were just going straight up and you're adding to the market, at some point you're going to see a crash and then you're going to be underwater, And I was just actually talking about this with you the other day where we were talking about investing strategy, where these people want to hop into the market right now in Bitcoin. And if we're starting to see this price action go up and we're expecting a 2x on Bitcoin, it's going to be a lot harder for them to swing trade that bag and sell. And then if they don't do that, they're going into a bear market. And it's just like, now you got to sit in another couple years underwater, deep underwater. So team, this is why you need Crypto Charge. We talk about it every show. Become a Crypto Charge member. Click the pin link in the comment section down below. You can join us there using code YouTube. And, we're excited for all new members here. Our community is getting a lot bigger. So check us out there. But let's get into the content now, team. Your questions, your hot takes. We're about to get into it. Matty, are you ready?
Let's do it.
Private Dylan says, what is the main reason that I should be considering selling my altcoins in 6 months?
I don't know who told you that, but I've never uttered anything like that out of my mouth. I'll tell you that much. A lot of people are very impatient. They treat investing, as this game of windfalls, and they want to be a part of something that's very exciting and fast. And the second the market isn't hot anymore, they walk away. They show no interest. They come back again with their pocket change to try to reinvest because they don't have like this consistent mindset of being an investor at all times. And sometimes that means just adding money to a portfolio, waiting, just letting it chill, earning a little bit of yield in USDC for that next cycle up. You're still intentionally placing money to the side for your investments. So, I would never say that you have a period where I need to be selling over this time. Some people will do kind of just, I'll DCA out and I'll just sell this much every day. And if that's fine, that if that's a strategy you want to employ, it's still better than just waiting for one target, right? That's absolutely better to ladder out using some sort of like day daily or weekly DCA method. But again, I'm very price target oriented. I haven't spent all this time, especially accumulating some of my larger bags, and some of those averages have become very, very attractive and very lucrative as I've been consistent with my stacking. To say, well, if this doesn't do what I expected to do in this time period, then I'm going to sell everything in 6 months, or I'm going to sell everything in 3 months or 4 months, or this particular macro event's happening on this date, so I should probably have everything sold by that time. You're probably not cut out for this space if you have that kind of mindset when it goes into investing. Even when we look at structures, across the board, and things can look so bullish, all it takes is one little macro event to kind of just take your timeline and put it on its head. And we've seen that time and time again. We saw that with Russia in the previous years in the bear market there. Lots of obviously fraud in the crypto space that, crushed consumer sentiment. And if you had deployed that same strategy, right, instead of, well, I'm just selling here, you probably would have taken an L, or just been like, hey, you know what, this market's garbage. It's just this pump and dump scheme. So, you kind of have to widen your time horizons with any investing. Just because crypto moves fast doesn't mean that we need to invest in a different way than we would in the stock market. You wouldn't say, well, hey, I bought all this Microsoft, shares in the last 3 months, and if Microsoft doesn't do what I think it's going to do in the next 6 months, I'm dumping all my Microsoft. It really just doesn't make a lot of sense. So, try to stay price target oriented. Try not to, follow these guys who are giving timeline predictions. They do that strictly for engagement, and they're wrong 99% of the time. You go back and watch their videos, they are never correct on their predictions, or they're just so vague that they give themselves 3 or 4 outs, and they're like, well, see, I kind of said this on this stream, this day, on this whatever about this asset reaching this price, but then you look at other 3 or 4 videos that say the exact opposite thing. So try not to follow these timeline predictions. It's a fool's game.
Yeah, I like that, Matty. And just to kind of go back to this, Matt, like what this guy Dylan was saying here, like what is the main reason I should be considering, like just taking out his like 6 months right here, you should be consider selling because we see multiple markets where you're able to sell at tops and enter in at bottoms. And Matty, you were just talking about something very important. It's like when people employ their own, like what they foresee an asset doing, which is like completely arbitrary and like within their own mind of like, oh, I see XRP going to $10,000 this bull run, which is like, is that really like what you lean on? And if it doesn't do that by 3 months, you're getting out of it. And this is where like the technical side like really steps in and like gives you like this level head approach where you're able to chart Bitcoin now going on 4 big cycles here, and you're able to see what are our expectations for Bitcoin. Is a 150K Bitcoin out of the question? I don't think so. Is a 750K Bitcoin out of the question? Probably, and you're able to look at multiple cycles and see what happens here. And this is why, Matty, I see you pull up the charts all the time, and it kind of gets annoying when people ask about these new cryptos, but it's like you can't chart these to the same level you can chart an XRP, a Bitcoin, stocks, gold and silver. You're not able to chart to that extent because we're talking about new projects here that have just gotten listed. So, I guess that's kind of like the messaging of why you want to be able to see an asset over multiple cycles. You want to see what an asset does. You want to be familiar with the fundamentals. I know that's kind of a ramble there, but does that make sense, Matt?
Yeah, I would agree with that, and it's about building a position for yourself that you can hold on to pieces to over time. Like we were discussing on the live show the other day, XRP, for example, XRP, even from the last cycle low in 2020, up about 3x from the new low that's been established. So that's kind of what we're looking for with part of our bag year over year, cycle over cycle, is that, hey, you know what, part of this bag you just keep chipping away at, you don't pay taxes on it, keeps being a part of your portfolio, and eventually those higher lows become significantly large amounts of money in your account, right? If you're buying XRP now, let's say at the 50-cent low, and a new higher low is established at this next cycle, let's say in the $2 to $3 range. That's absolutely fantastic. Even though you might rebuild and you might re-add to that position, having some of that position for long term, having that longer term horizon, especially when you're able to get into assets that are good quality long term, I think that's really kind of the bigger reward to be had. And again, like we've talked about many, many times, the potential ability to borrow against those assets in the future without having to sell them, being able to use that money for other cash flowing assets. There's a lot of down the road mechanics that we can employ to be even more profitable with our investing beyond just the net market value of a particular asset. So please, guys, just don't be short-sighted. I guess that's really what my big message here is. Don't be short-sighted. Have a short-term plan, but also have a long-term plan, and make sure that you're not using money that you cannot afford to invest. Make a budget for yourself that you can genuinely afford. If this is going to interrupt your ability to pay bills in 6 months from now because you've invested in an amount that is required to come back out, you probably invested too much, right? So let's make sure that we're setting budgets for ourselves that we can afford. Don't do this comparison thing of, I see this guy did this and he invested this this much, you got this much out of it. Well, you don't know what his budget or his lifestyle or his obligations are. So do things based on your obligations, your lifestyle, your budget.
Bradley Hunt says, I am looking for an entry on Solana. Can you do some TA?
Sure, we can absolutely do some TA. You guys know that Solana is definitely here to stay, right? I have my beef with the fundamental side of it of having as many outages as they had, especially with as big of a project and as big of a team they have. But over time things get better, and I do hope that Solana continues to be a good a chain that people continue to build on, because it is a lot more efficient than Ethereum, and it allows us to deploy a lot of the same contracts. We've seen the NFT space pick up a lot in Solana. Now I do want to point out that a lot of the volume we've seen this cycle is because of the NFT volume that we've seen on the Solana network. So let's say next cycle we see a new chain pop up, and the NFT market is now booming on that chain. You're probably not going to see that same parabola that sets in with Solana. And like we've also talked about over time, market cap grows. Yes, of course, you're still going to see great gains, but eventually you're going to see a little bit of that diminishing return over time. It's not going to be that same return that you saw in previous cycles. But let's take a quick look here at Solana. When we look at Solana from previous structures, like first, for example, here, this crashing structure from 2020, we see the swing high, we see the swing low. Reach out to a 55 extension here, saw a pretty decent little top here, big distributive structure, uses the 34 here as a top, breaks back down, uses a lot of these fibs as support and resistance on the way in. You can see that recently we've come back almost up into that 55 top there, trying to hold on to that 34. But if we go for the more recent crashing structure that we have here, because we have a lot more price history that's shown that there's a clear market bottom that came here, Solana bottoming out at $8. So again, guys, don't get caught in euphoria. $266 to $8, right? This is what happens when markets need to rebalance themselves, and it came pretty close to retesting that previous top in here, right? Not quite, but pretty close to testing that previous top in there as a new floor of support. Now, what has Solana done since that cycle low? So $8 up to current is an 18x. To its peak was about 25x. So just acknowledge off the bat that you are investing in an asset that is up 18 to 25x from its lows. Okay, you were taking probabilities out of your favor by buying into a trend that is very, very exhausted. Now, when we look again at some of the areas of interest here that really should have been retested, it's going to say at least this area in here. And this isn't unique to Solana. There's a lot of assets that have just kind of been lingering at higher prices that really haven't offered that. So the downside risk to that area is about minus 68 to minus 73%. So if you are of the belief that you think Solana is going to go exponentially higher and you're this big Solana bull and you don't really care about the potential minus 60 or 70% if we were to see a large correction in the market and Solana move back down into some of these areas of interest, you can go ahead and get involved, but understand that there really hasn't been any really major backtest in here. When you look at this correction in here, after this big set of impulses in here, this was a 6x move over a 6x move, and after minus that 6x was only about a 35% correction. Then you get a next set of impulses that kick off here. So we get a second leg that comes up for a 160% move, and then you get a little bit of a cool off in here, minus 43%. But we really haven't done any big rebalancing on this chart right now. So understand that you are buying an asset that is just 43% below its previous all-time high. So even if we look at the fibs here, right, we go, okay, hey, we're still in the cycle. We're working our way through these fibs, rejection from the 786, holding on to the 50 here. I think Solana reaches $400 or reaches $1,000. Great, right? We're trading at 150 right now, and you're looking for maybe 180% to maybe a 5 or 6x reward. So can we always see our expectations exceeded? Yes. How much money has to pour into this market? What does the total market cap have to be in order for us to see this kind of money cycle through, for us to see, let's, for example, a $3,000 or $5,000 Solana? I don't want you guys to take any of these absolute top targets and go, that's what has to happen, right? Once you start doing that, you're going to be making very emotional, very delusional, decisions here. So again, we're minus 40% from the top. Same reason why I wouldn't suggest buying Bitcoin right now. Does it mean I am a fundamental, antagonist against this asset? No, of course not. But I also have to employ technicals to help me to make decisions, and buying an asset 40% off its previous all-time high is not a good fundamental technical decision. So I would really look for at least a pullback down if you're just dying to get into this. And I gotta know why, guys, right? Like 106 would probably be like the absolute most shallow, and then like 70 being like, the second most shallow. But you can see this huge area of interest in here that just was a big accumulative top broken out of no real back test in there. All right. So that's just what I want you guys to be aware of. If you're going to buy into Solana, understand it's lofty, understand it's imbalanced, and that you are taking additional risks.
Jimbro23 says, what is a good crypto exchange to use for day trading based off the current bans on crypto exchanges?
So I don't know if you can, as far as I know, actually, you can't spin up new accounts on MEXC right now if you didn't already have one. We do have a link for an exchange in our Discord right now. We haven't moved over to it yet, but it's our next backup exchange. So if you guys want that name of the exchange, it's all the info is in the Discord there with the referral link. And we might be moving to that shortly here. But 99% of my members have a MEXC account. So we haven't had that need to migrate yet. Once we do need to have that need to migrate, we'll go ahead and move to that exchange.
Ham88 says, I am getting bored of my altcoins not moving. Are there better ones I can put my money in?
Oh, are you bored? Welcome to investing. Like, this is part of how it goes. Even some of the greatest investors, right? You look at Charlie Munger, who, whatever, even though he's very anti-crypto and very much dead now. And you look at also like Warren Buffett, right? And they talk about investing. It's not sexy, guys. It's not this, like we've talked about, like the 80s of these guys screaming on trading floors, and this is the only way to be incredibly profitable. You are here to be investors. You're not day traders, so stop acting like it, right? Investing is supposed to be boring. There's a lot of sideways action in the market right now. Most of the market right now is moving sideways. The equity markets are not doing anything meaningful right now. Go ahead and chase. Please feel free to chase. It's not my dollars, but I would not recommend chasing. It's if you feel like you're hunkered into some good quality projects and you feel like you have pretty good cost basis overall, chill out, right? Not every day has to be an actionable day in investing. It doesn't have to be an actual day in crypto. A lot of times sitting on your hands, waiting, being patient is the more difficult but very essential part of investing as a whole. So I don't know if you're young, I don't know if you're new, but you have to learn a certain level of patience if you're going to be involved in this market. I mean, and I don't know what we're talking about here with, not moving. We were literally impulsing into even April and we're in May now. So like the market's cooled off for a few weeks and you're bored. Like, I don't know what to tell you. You probably should go hit the casino and go get some adrenaline pumping there, because this is not supposed to be a dopamine response. It's supposed to be tactical, emotionless decisions to help make you both a great short and long-term portfolio. And for me, short-term portfolio sometimes means even a handful of years, 2, 3, 4 years, right? And that's where I think a lot of this mindset change happens for you guys. So you guys hear short-term, you think by next week, by next month, and by the end of this quarter. I'm not going to ever tell you guys that, right? I'm always going to have longer expectations. I would rather under promise and over deliver, even with myself, right? Even with my own expectations. Say, hey, great. I'm okay if this takes 5, 6 years. If this happens in 1 year, it happens in 6 months, awesome, right? But I don't want to disappoint myself, constantly put myself in the same emotional turmoil by making decisions because I'm bored with what's happening with the market right now. The market will be boring. Sometimes the market draws out for several months like this. And that is really the number one reason that people walk away from the market. It's not downwards price action and it's not upwards price action. It's sideways price action, because they know that. Market makers know that the longer they draw it out, the more people exit the market, and then you see that next set of impulses kick off. So I hope that you learned a little bit of patience. I know that a lot of people are doing kind of like dopamine detoxes these days too, to kind of help curb some of this behavior that we've seen. This is getting a little bit off topic now, but right, like we've had smartphones in our faces now for so long, and there's a younger generation now that's been growing up with screens in their faces. I went through most of my teenage years without like a proper full touch screen phone where I could access absolutely anything I wanted to, right? So now we have this dopamine saturation in our life, and it's affected our ability to objectively view the world around us. So I'd recommend maybe also just kind of looking at some of those dopamine detox exercises. They can be very, very helpful for both critical thinking, long-term success, and of course your investing as a whole.
That was good, Matty. This person's like has to clearly be young, because like you were talking about crypto here. It's like, hey, bro, maybe you need to figure out a way to like chill out, dopamine exercises.
I mean, I don't know. If you turn your phone on grayscale for a couple hours a day, just whatever it takes to help kind of bring your expectation of those dopamine and serotonin spikes down to a reasonable level.
Oh, bruh. BB Huddy says, what are the best indicators in your opinion for technical analysis?
Yes, good question. So if you guys have been following us for any amount of time, you guys know that I keep it simple. And I genuinely am not a big believer in running 100 indicators on your chart. Please feel free to experiment with whatever indicators you want to. I'm not telling you guys to be closed-minded and not try anything other than what I use or what your favorite analyst uses. There's a reason why they've picked those tools, especially if they have staples. It's because they work, and it does help them narrate and tell a good story about what's happening on the charts. But I would say the fundamentals that really have been staples for me that I would never ever deviate from. I may add things back into my technical analysis in the future, but I never deviate from these things. Number one's going to be support and resistance. If you guys do not know what support and resistance or supply and demand is, stop. Like don't even think about putting a moving average on your on your charts until you understand support and resistance. It's very, very basic, very simple. It's basically, big areas of resistance where we're unable to break above a level, or big areas of support where we're unable to break below a certain level. If you're able to identify these levels on daily and weekly levels, your overall charting is already going to be like 50% done. I'm not even being facetious about this. About 50% done just marking key levels on daily and weekly levels. Next is going to be Fibonacci's. You guys know that I'm a huge Fibonacci guy. And again, this is not very difficult. We have a whole tutorial on our website. We recently did a Discord exclusive series showing you guys how to set up TradingView like I have, the top tools I use. So Fibonacci is going to be a big one of those. I do run a handful of moving averages on my screen, but it's only about 4 of them. So I run 2 shorter term ones and 2 longer term ones. It kind of just give me an idea of momentum. But again, everything is still going to be based more heavily on the support and resistance levels in the Fibonacci's. And I would actually say probably those are the main 3 that I would consider, the staples within my investing. Now, again, I would never say that you shouldn't take a look at MACD or RSI or, other indicators that you find helpful or can maybe give you a little bit additional confluence. But at the very minimum, please understand support and resistance. If you're willing to knock that out and become an absolute expert in that, every other technical concept you want to learn becomes so much easier. Very, very buttery transition from there. So if you guys want to learn those things, you guys don't have to even pay to learn those things. You guys can sign up for Crypto Charge 30 days free. And that includes our learning center where all those tutorials are discussed. You could absolutely knock those out in that 30-day free trial. You could get through a whole learning center in that 30-day free trial, and enjoy a whole month worth of our program before you even make a decision if you want to join, as a paid member or not. So I'd implore you guys to at least check out what we got. You go, hey, this isn't for me. I don't want to do all this stuff myself. Fine, go for it. But it sounds like most of you guys are interested in taking that fishing rod for yourself, being self-sufficient, and making decisions on your own that you can be confident in.
All right, Matty, we're out of time. Great show today. Team, if you got something good out of it, make sure you leave a like on this video. We'll see you guys next week. Bye.